Hello and happy Friday, and welcome back to Ticker Symbol Live, where we take a look at ARK Invest's vision of the future and how they're investing in it one day at a time. Happy Friday, it's the end of the week, last trading day of the week. So what we're going to do is we're going to take a weekly view at ARK's data real quick across their 5 actively managed ETFs, and then we're actually going to dive into one of their new positions. I've been on a 3D printing kick lately. We covered a DDD 3D system stock earlier this week, or maybe it was late last week, and ticker symbol U's video for last week was also about 3D printing. And ARK Invest has a new position in the 3D printing space that I'm actually very excited about. So I figured on Friday we would spend a little time covering some new positions instead of covering some of their biggest positions, just to mix it up a little bit. So let's head over to the ARK Reactor and see what I found. So I have things ordered for a weekly view. I'm going to highlight a couple of things here. First of all, you can see there's a little white square here in the Cathy indicator. I'm actually missing ARKF's data for the 25th. ARK Invest pulled a sneaky on me and they released the data during a weird time, and I didn't grab it. So I'm working on the back end to fill in that gap, and hopefully we're not missing anything big, but just pointing your attention to the fact that ARKF is actually a very small fund, making up less than 10% of their actively managed dollars, so I don't think it's going to be a big deal. Also, doesn't hold any 3D printing stocks. So I have things ordered in terms of ARK Invest's largest positions in terms of ARK rank. So the table currently matches the bar chart on the right here. So we covered Teladoc, we covered Roku, we have covered Zoom, and we went down and down the list in terms of their biggest buys. And you can see that over the week, they've still been purchasing those the most. So I'm feeling pretty good about the way I'm choosing the video topics. And if we scroll all the way down past all the other topics we could be covering, you will see that they have bought a stock called Jaws Spitfire. There's no percentage change here because it's a recent purchase, so there's no change to compare it to 1 week ago. It's a new position. So it's a SPAC, and it released at $10, and it was trading at $10, so it's still at the SPAC price, even though we know what the company is, which means it's an interesting opportunity to buy early. And they have almost $10 million in it today. It's their 160th biggest holding, making it one of their smallest 5 holdings. Here it is, Spitfire acquisition, Jaws Spitfire acquisition. And so I wanted to spend today talking about that because it's a real opportunity that we might be able to buy in at SPAC prices. And it's a very exciting stock. So let me throw one of these bad boys up here. This is not financial advice. I am not telling you to go out and buy this stock, but I am telling you that I am very interested in this stock and why ARK Invest may have purchased it. So what the heck is this thing? Let me stop sharing my screen and we can share the investor presentation. Very cool. So even before we do that, let's check out the actual stock. And you'll see Jaws Spitfire Acquisition Corp, currently ticker symbol SPFR for Spitfire on the New York Stock Exchange. And if you look for the past 6 months, you actually don't get anything before February 1st, and that's because this is a relatively new SPAC, and it's pretty much at an all-time low, which is why we're talking about it. I'm bringing it to your attention now because this is about as cheap as it gets for SPACs that release at $10, right? $11-ish if you're talking about the units. So going over to the Spitfire, right? Here's the investment thesis, right? So first of all, their cover page is really cool. So let's go back up here. They're talking about building the impossible. And this is a 3D printing, metal 3D printing company, right? Disruptive 3D metal printing for mass adoption. And so this is that scalability issue that we were talking about in the ticker symbol U video, right? Is 3D printing as a manufacturing process scalable? My thesis is yes. A lot of other people's thesis is no. And I think that makes it a big opportunity for the future. Hopefully ARK Invest also thinks yes because they have a whole 3D printing index about it, right? Cool. So exceptional management team, that's something we always look for. Differentiated additive manufacturing technology platform, also backed by many, many patents. Poised to disrupt and take over a greater share of the $100+ billion high value metal printing parts market. And we'll talk about some of the applications of that soon. They're a category creator. They're delivering parts that are out of reach for other additive manufacturing suppliers at higher performance. And how they do that is pretty cool. Quicker and at lower costs. So manufacturing higher performance parts faster and cheaper than their competition, and their competition including legacy producers, right? So subtractive manufacturing, for example. Strongest IP portfolio in the metal additive manufacturing space, 48 patents, as I just mentioned. They hold a lot of patents. This is something I always look for, and I always try to even read the patents when I can understand them, because that's part of their moat, right? When they can do things others can't, that's part of their core differentiator and a reason to invest in them among all of their competitors, right? Strong growth and cash flow, we'll talk about that last, and big blue chip customers headlined by SpaceX. Fun fact, rumor on the street is Tesla wanted to buy this 3D printing company, and they said no. So Tesla was looking at acquiring Velo3D, and Velo3D said, hey, we think we can add a lot more value than to just Tesla. We're going to not take that acquisition. So they went public they're going public via this reverse merger with the SPAC, right? So as you can tell, I'm pretty excited about it because I'm chomping on my words a little bit. But my point is, this has attracted attention from Elon Musk from two angles, right? Tesla and SpaceX, which to me is a really good sign. So summary of their transaction, we can blow right through that. Strong leadership from some big names in relevant spaces. First Solar, Morgan Stanley, Bank of America, right? So on the technology side with their CEO and on the finance side with their CFO, right? Whenever I see CFOs, I want to see strong financial experience, not just strong technical experience, right? So Morgan Stanley and Bank of America, even though this channel is primarily kind of a little on the edgy anti-big bank side, realize that it's important to have CFOs with strong financial industrial experience, right? So these are positives to me that this guy has a banking background because he's their CFO, as opposed to being a technology guy in a banking position, specifically calling that out. So here's the company at a glance. They have key investors, including SpaceX. They work with big blue chip customers. I've worked with several of these companies as well as my time as a rocket scientist in MIT. I've had the privilege of working with Raytheon and Honeywell, and I can tell you that these are awesome companies that choose their partners and technology vendors wisely, right? They do not spend money if they don't think they're getting a lot of bang for their buck. So it's great to see that Velo3D is making headway with some of these huge names, right? The revenue in terms of millions is on an exponential trajectory, and we'll talk about why. But some key statistics is they're addressing a $35 billion addressable market by 2030. Their compound annual growth rate, I need to be a little less excited about this stock, is 92%, which is massive. They hold 48 patents. They have over a 50% gross margin. And when you include EBITDA, it's still 34%, which is great. And it's an annualized rate of return of almost 40%. So what are these guys doing? They're metal additive manufacturing, right? Which just means 3D printing, adding layer by layer, in high interest but low adoption. This is a high interest but low adoption space today, right? And so here are the challenges. It's tough to consolidate complex assemblies containing dozens of parts into one. It sounds good on paper, but it's tough to make something in one part that takes over the function of a sub-assembly, of something that takes multiple parts to do. You want higher performance products and 10% shorter lead time and 2 times lower cost. But the reality is you can't produce the required designs. There's performance degradation with doing it this way, and sometimes it's just too hard to implement. It's not impossible if you have the right underlying technology, is what Velo3D is saying, right? And so what Velo has done is crack the code of metal additive manufacturing. Through their highly differentiated technology, they have a full stack solution, meaning they do everything from the design to the manufacturing and possibly including the implementation in some cases. And so that's unleashing this high value production market, right? Moving from that low adoption to high adoption. 6 years, $150 million of development, and protected by 48 patents. I really like highlighting that they're protected by patents because, again, a strong moat makes for a strong investment, in my opinion. They build parts for SpaceX. The Raptor engine breakthrough. The Raptor engine is a breakthrough in rocket engine technology, and it's critical. Velo3D was critical for SpaceX's most efficient and challenging design, right? So they're powering the breakthroughs involved in Super Heavy and Starship's launch cost reductions. So let's talk a little bit about their growing market. So the additive manufacturing metal growth market is huge. It's a budding market. I think this is a pretty low number for metal parts. I think we're going to see metal 3D printing skyrocket. So I'm surprised that this is only a 5% annual growth rate, but what they're saying is the high value parts subsector of that. So the really tough parts that go into jet engines, rocket engines, not necessarily car parts, but the low volume, high complexity rocket parts. That's the growing market. That's the 30% compound annual growth rate going on here. So I can believe that. That's actually what ARK Invest is saying as well. High complexity, low volume parts. So they're specifically calling that out here. I just want to make sure you understand where the opportunity lies, right? So their disruptive technology, they're specifically targeting that high compound annual growth rate market subsector of metal 3D printing. And so they believe that Velo will enable 20 billion of that 2030 market. So huge, right? And so these are the parts we're talking about, right? These are the parts that you just cannot make through subtractive manufacturing. Complex products with many internal parts that are just hard to machine for jet engines, fuel delivery systems, complex heat exchangers, and so on. This is the type of stuff that metal 3D printing enables because it's the only manufacturing process that you can even do this kind of stuff with, right? So again, you can imagine this sitting on a little plate and it's being built layer by layer with these complex spirals. And in the center of this is a cavity. That's metal space that they all saved, right? That's weight that didn't get put in because this is all hollow on the inside. How you would manufacture this with subtractive manufacturing is you would probably start with 4 straight pipes into this, one cone here, and then you would have to twist it into shape, right? And the metal twisting process might involve heating, it might involve treatment, it might involve all these extra steps that make this part possible to make that way, but incredibly difficult, complex, time-consuming, and thus expensive, right? So instead of twisting metal, you're just 3D printing it in the shape it's going to be in, right? So that's what's going on here. And that, of course, enables shorter lead time and makes it cost competitive to do things this way. So the key to unleashing this explosive market, what's going on? You can do 2 things. And this is the chart that actually excites me the most in this presentation. You can reproduce legacy parts without redesign, and you can produce optimal designs without performance degradation. What does that mean? That means you can take parts that are not 3D printed today and make them the same part, but for cheaper, and just switch out that widget, right? Hey, here's the exact same part, but we did it in way less time and for cheaper. Here you go. Or you can say, what is this part actually doing? Let me make the optimal design to do that. Optimal meaning by performance, by weight, by lack of parts for decreasing the failure rate, so on and so forth. And now we're replacing the part for the optimal version of that part, right? So either just straight one-for-one copy, or understanding the interface of that part and saying we're going to change everything in between those interfaces but not the interfaces, and optimize those 2 things. And so when I was at MIT as a rocket scientist, we were always thinking about those traits. Hey, when we need to redesign this part, are we just going to do it over again, or are we going to take the time and tweak this part between the 2 things it sits next to and try to increase the performance output of this part? For radars and for circuit boards and for antennas and stuff, thinking about those individual parts in that processing chain, that signal processing chain, is hyper important. And so what Velo3D is saying is, hey, we can do both of those things on the metal side, on the physical part side, right? We can give you the exact same part, or we can figure out what the optimal version of that part should look like and stick it into that chain for you. And so doing so unlocks large scale opportunities, right? Again, amazing list of customers. I've worked with about 1/4 of these companies, I would say, maybe 1/5. But, again, SpaceX, Lockheed Martin, Raytheon, Honeywell, I've definitely touched products that have touched a lot of these companies. And my only point in saying that is to tell you I have firsthand experience about the kind of scrutiny that vendors go through to be able to make it on the list of some of these companies to be able to work with them, right? So being able to pass all those big financial checks from these big companies is a huge point in their bucket, in my opinion, right? Yeah, I love these snarky comments like this. It's not rocket science. Yes. Wait, yes, it is. Yeah, and sorry, this isn't me trying to toot my own horn, right? It's trying to add some first-hand value, some first-hand context. I've worked with some of these vendors, and I can tell you that working with them is not easy. So when I see them here, I can add some first-hand experience saying, hey, I realized something that you should realize too, and that's it's hard to work with some of these people. And this new SPAC that's been around for 1 week that ARK Invest bought in the 3D printing, additive manufacturing metals space is doing just that. Great. So let's talk about some of them. Honeywell's $400 million supply chain problem. This is a use case, right? So there's a challenge with sourcing of legacy parts. And this is true in radars and rockets all over the place. Low volume, high complexity, and vendors don't like maintaining 20-year-old parts for 1 or 2 clients, right? After a decade, there's a less than 5% producible by commodity in additive manufacturing. So what that means is as a technology gets older and older in time, there are less firms capable of making replacement parts for that thing. It's like trying to buy a replacement part for a classic car that's not a, Mustang or some very popular classic car. The older that car gets, the fewer and fewer places you can go to get a replacement part. So the solution is to keep a schematic of that part in one place, and then Velo3D can just 3D print it forever. There's no engineer figuring out how to manufacture that. We figure out the schematic once, and we save that as a file, and then whenever we need to print from that schematic, that's how we do it. And so that they're able to do this for Honeywell as of Q2 2021, so in the future, right? Energy supplier lead time problem. So flipping the script from supply to lead time, there's a $6 billion flow control company, thousands of low volume, high value parts that have a 1-year lead time. So between the time where they know they need something and when they want to acquire it, there's a year, right? So they have to place orders well in advance, which comes with all sorts of challenges like predicting demand 1 year into the future, right? Production disruptions to its energy customers. That's the result here. If I can't predict my demand accurately, I'm going to have disruptions in my customer service when I can't keep up with the actual demand 1 year later. So additive manufacturing enables spares on demand. It enables them to say, hey, I need this part right now, and they can just go build it. So reducing that lead time from a year to what I am imagining is on the order of weeks, right? So imagine just going out from 12-month lead time to say 12 days or even 12 weeks, which is 3 months lead time, right? Huge, huge, huge difference in forecasting something out 12 days or 12 weeks versus 12 months. Jet engine manufacturing, we can go down and down the list. I encourage you to read this full presentation. Again, the whole point is this company's been around for 1 week on the public market. It's currently trading at its SPAC price of $10, which is what SPACs typically release at. ARK Invest holds it, 3D printing in metals, huge opportunity in my opinion to get in on literally the ground floor. So, and it's being disruptive in defensible technology, right? But I think this is primarily the defense industry is what they're talking about. So, incumbent commodity additive manufacturing requires supports that can enable these designs, but that are internal and inaccessible. So what's going on here? So they're 3D printing. If you're 3D printing a big hollow space, you need supports there so that things don't crumble with whatever weight you add on top. And you're trying to support the structure from the inside, right, as it's being built because it's hollow. So what happens is, at the end, you must somehow extract those supports because they're not part of the part, right? They're part of the 3D printing template, but not part of the final part you want to deliver to your customer. So what they're doing is they're changing the game by doing support-free technology. So this hollow cavity can be truly hollow. You don't need to melt away the supports or make it out of some other material that you can acid wash out of there, or all of these other considerations that come with making hollow cavities. And again, the point of making hollow cavities, even if they're not part of the part's use, for example, something that requires a cavity to be filled, is you're trying to reduce weight. So 3D printing enables all these complex structures that can be hollow and offer the same support and physical properties as solid parts, because you're building them in a way where you're not sacrificing structural integrity when you're sacrificing in quotes now, mass, right? So the same part with the same performance but lighter makes it a better part. And so that's what's going on here. Produce any design, even those with complex internal geometries, right? Cavities, and you can see all these subcavities and all these other funky things going on here, holes within holes, holes between walls, and all that stuff without supports. And that is a game changer in 3D printing. Breakthroughs enabled by a full stack solution. Again, this is what we were talking about earlier: design optimization, design building, and then quality validation, design testing, right? Stress testing, vibration testing, what have you. Velo is at least 5 years ahead of any competition. The head of additive manufacturing for SpaceX said this about them. So again, metal 3D printing, working with companies like SpaceX, interested in companies like Tesla. Huge differentiator, I think. Technology protected by deep IP moat. This is the fourth time I'm bringing it up, right? 48 systems, methods, and composition of matter granted patents. Huge intellectual property moat, which in my opinion is one of the most important kind of moats. And then proven traction and growth, right? So this is where they're going to start talking about their financials. Spoiler alert, they're expecting exponential growth, which is the kind of growth we exclusively cover on this channel. So it's good to see that they fall right into that bucket, right? Market seeding, majority booked or pre-ordered right here for 2022, and then, broad commercialization into the mid 2020s. And so the growth drivers, right? So the way exponential growth works is you're growing on growth on growth on growth. For example, you're growing your share of an already growing market. So that's two multiplicative factors resulting in exponential growth, right? You are in a growing market, so you're going to grow naturally if your market share stays constant. But as your market share increases, you multiply that by the size of your market as it continues to grow. So blue ocean market, lots and lots of 3D printing metal opportunities. Land and expand, start small and start making bigger and more complex parts for your most valued customers. Expand competitive advantage with new products, whether that's software, hardware, testing solutions, etc. And then accelerate new customer acquisition, right? Increase the rate at which you acquire and maintain those new customers. And so that's what's going on here, right? And they're just going to be describing each one of those four components, right? So many customers are seeking higher performance, reduced production lead times, and cost savings, all of which is enabled by 3D printing. Land and expand strategy, the current way they acquire and keep customers is working. That's what that's saying. And they've used it to acquire companies like SpaceX, right? Systems ordered by customer. SpaceX ordered one part in their first order. 2 years later, they ordered 12 parts. 3 years later, they ordered 22 parts. So working with Velo3D is sweet, right? And that's kind of why I was harping on the fact that they're getting in with some of these big companies, because if that's hard to do, the hardest part of this is getting in the door when you're talking about the space and defense industry, right? Because your part must perform, or else it's going to be responsible for what could be a critical failure. Right, so talking more about their actual product, their metal 3D printing process and the machines behind it, right? Producing parts of a 400% larger volume, dropping part costs by 2/3 to 4/5, right? An unbelievable number, again, enabled by changing the script on how the part is built completely, and that allows them to serve a wider range of applications, right? And that accelerates their customer base. As more people buy in and as more people hear that they work with SpaceX, they're going to be like, oh, if you're good enough for SpaceX, you're certainly good enough to be on my radar. Let me at least look into you. And as a new company, that is infinitely valuable, right? It's very hard to get in the door as a new company. And what these guys have done is successfully done that. That to me is a early market differentiator that goes away with time. As they get older, that matters less and less. But right now, early in their growth, the bigger that base is that they build now, the more they have to grow on exponentially, right? That start of the exponential curve matters a lot. And, finally, now we're into their financials, right? And we can see that they've had a ton of pure sales, $120,000 in annual service, 50% gross margins, and then a lot of recurring business from keeping these parts on file, 3D printing them on demand, maintenance on demand, manufacturing on demand, right? Demonstrated high margin for unit economics, right? So each part provides them with a lot of margin. So as they scale, they make a lot of profit. And then, making an asset-light business. And this is another thing that really intrigues me. In ticker symbol use banking video, we talk a lot about being asset-light. We talk a lot about how physical branches have turned from an asset into a liability that has to get spread out across customer acquisition costs, right? So what Velo is calling out on this slide here is they are keeping their own assets limited. The amount of stuff that they have to physically maintain is small. In-house operations limited to final assembly and test, easily scalable manufacturing. Average CapEx is just 3% of revenue. And what that's telling me is that they're considering their scalability long term. They don't want to increase their physical device footprint as they scale. They want to be scaling digitally, right? And enabling software-like margins. You know what I mean? So there's a big difference between scaling by building new brick and mortar things, by new machines, by just saying, hey, if we want to increase production, we need to increase number of machines, and being able to being able to scale digitally, right? That's what's going on here. And so they want to scale their revenue while maintaining consistent CapEx. That's what's going on here. Strong visibility into 2022 revenue. So, breaking out how that exponential growth is going to happen, right? Recurring services versus their backlog of pre-orders and products versus booking new products and so on, right? So a strong part of their revenue is going to be going through their backlog, right? As they get more and more orders into the future, as that future becomes the present, they have to fulfill those orders. And that's what the biggest bar here is, which is always great, right? It would be really weird if this wasn't the biggest part of their revenue. And, I think we're getting into the nitty gritty of the financials, so I'll let you read that. I don't want to read like an Excel spreadsheet to you, but my point is this is a very exciting 3D printing company working with some of the biggest names in the space, right? So let's go all the way back up here. Some of the biggest names in the space that just released via SPAC, right? So again, started trading on Monday, January 25th at $11 here. They had a big rally here up. Oh, this isn't even a big rally. 7%. They traded at, $11 and some odd cents. And now they're back down to the $10 mark, which is where SPACs typically trade right in the beginning. So the ticker symbol for this is SPFR, Jaws Spitfire Acquisition Corp. But realize that this is the SPAC backing Velo3D, right? So hopefully that gives you insight into ARK Invest's new position in this metal 3D printing company. It, of course, will sit inside ARKQ, ARK Invest fund themed around the autonomous revolution, and I strongly suspect it will also sit inside ARKX, ARK Invest's future fund themed around space exploration and the technologies that will benefit it and the technologies that are enabled by it the most. 3D printing definitely fits the bill for that. So with the remaining couple minutes I have, I'll answer a few questions, and then I wish you all a happy last market day of the week and a great weekend. Let's see what's going on in the comments. How do they position themselves comparing to DDD and Stratasys? Are they just more focused on metal? Thanks. Yeah, they're exclusively focused on metal. And I think what they're really doing is they're direct competitors in those ways, but because of their patents and their actual process of additive manufacturing, they're going to be enabled, in my opinion, to make outsized gains by making these very high performance parts that maybe the other systems can't necessarily replicate just by virtue of doing things in a different way. And I just want to call that out. 3D printing is a process. It's an idea. It's a new way to make stuff. So even though there are a lot of 3D printing companies out there, realize there are a lot of different 3D printing optimization methods out there. There are a lot of different 3D printing materials out there. There are a lot of different 3D printing strategies to perform the same thing, going layer by layer versus doing things, in different components and combining them as sub-assemblies again, which may require more parts, but now you can do certain sneaky things versus how you're building the support structures for cavities. All of that is huge, huge, huge industry-specific stuff. My point is 3D printing is like saying the word manufacturing. It's an incredibly big space with lots and lots of different moving parts and lots of ways of addressing each part. So you have to think about things like intellectual property when you're talking about these companies, because how they decide to do these different things matters, right? Reading through the comments here. As per usual, great company presentation with much needed comments and explanations. Definitely bullish on 3D printing. So let me address both things here. First of all, thanks a lot. Hopefully this commentary is engaging. I realize I'm pretty light on the financials, but I try to be big on the idea, right? So that you can watch this video 2, 3, 4, 5, 6 weeks from now, and it's still relevant because I covered what is this company doing at a high level, what is the big idea, how does it tie into ARK Invest, in my opinion, as somebody who's looking from the outside in. And then the second part, I totally agree with you. I think 3D printing is long overdue for its time to shine. I know ARK Invest feels that way too because they keep pounding the table on it. And so I like exposing 3D printing stocks while they're early in their market capitalization because I see outsized gains there over the next decade for sure. So thanks a lot for this kind comment. Do you think it's better to buy the SPAC or wait for the company to become public? This is really up to you and your stomach for risk. I have no problem buying SPACs. I've never had a problem buying SPACs. I've had, mixed success with buying SPACs. I've bought some that have skyrocketed after their merger, and I have bought some that have crumbled after their merger. And that's okay because if you believe in the vision of the company, when they skyrocket, it's an opportunity to sell if you think you want to buy back lower. And if they crumble, it's an opportunity to buy the dip. Right? Because these companies are only getting more and more mature as time progresses. And that matters a lot when you're talking about disruptive innovation, advanced technology, immature ways of doing things that just need time to grow and get refined, right? Technology maturity, you know what I mean? Not that they're immature, just that they're young companies that need time to scale and grow and refine, right? So depending on where your stomach for risk is, or your appetite for risk, I should say, you might want to wait until the reverse merger happens and they get whatever their final ticker symbol will be, so you know that financing is secure, versus now when you're like, hey, I'm buying into this big idea and I'm sure it's all going to work out. That's just up to you. For a stock market noob, what are your thoughts about buying the ETFs only versus individually buying stocks using ARK as research? I like doing both of those things. I hold several ARK products. They rotate through my portfolio, different position amounts and different stocks depending on what else I'm holding, right? They're a great financial product. I use ARKW as cash, for example. So I have a cash position and then I have a separate ARKW position that I'm willing to sell as if it was cash. And I hold individual companies. For example, I made a Teladoc video and then right after that Teladoc video, I went out and I literally bought Teladoc stock. Right, so full disclaimer, I own ARK stocks, I own individual stocks within ARK's portfolios, and I own ARK's ETFs, right? And I use their research. So ARK Invest has 2 websites. They have ark-funds.com, where you can find all the data that we go through in the ARK reactor. Let me share my screen there. Share screen, boom, boom, boom. So the ARK reactor, this data comes from ark-funds.com, right? The big ideas, all the presentations, all of the reports, all of the PowerPoints you see where I reference ARK comes from a literally different website. It comes from ark-invest.com. That's their research, future-driven, vision-driven website. And so that's what's going on here. And the answer to your question is do both. Go look at arkfunds.com and see what they're holding. Go look at arkinvest.com and see what they're researching. And those two halves are why I have 2 channels. Ticker symbol U focuses on ARK's big vision, ARKinvest.com. Ticker symbol Live focuses on their stocks, ARKfunds.com. And that's what's going on here. So, complicated answer to what is a great investing question. I encourage you to do your own research. Can they work with any metal? I have no idea. Yeah, I don't know if they use proprietary alloys, if that's part of their patents, if they only work with certain metals, if there's different processing for different types of metals. For example, different metals have different melting temperatures. Is that a factor in their specific 3D printing process? I'm not sure. That's definitely something we should go research if that's the type of question you care about for this company, which is a absolutely fair question to care about. So my thinking is more like, hey, what kind of parts are they building? What kind of market are they approaching? And how do they see themselves differentiating themselves? Part of which is what metals they work with, but part of which is also how they optimize their designs, what kind of parts they're building for which vendors, why SpaceX chose them, what parts they're building for SpaceX, how did that grow from 1 to 22 parts in just a few years, etc. And finally, I'll just answer this because this is my favorite type of comment. 3D printing is also gaining traction in the construction industry. Very interesting tech. Yes, somebody should go make a video about 3D printing in construction. Hint, 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 that is ticker symbol U's most recent video. Great. That's it for today. Thank you for joining me. I'm super excited about Velo3D. Full disclaimer, I do own this stock now. I bought it yesterday. I read this investor presentation. I'm very bullish on this stock, and I'm very, very bullish on the 3D printing market as a whole. It's been covered extensively at this point on both channels. I'm a big, big bull on 3D printing as a process. So, grain of salt and full disclaimer, I am not a financial advisor, and I do own this stock. So, there you go. This is Ticker Symbol Live. My name is Alex, reminding you that the best investment you can make is in you. Thanks for watching.